What's good with y'all boys, man? We're back with another video. As you can see by the title, we're gonna go over liquidity sweeps more in depth. Because a lot of people ask me, how do I know which highs and lows are more valid than others? And that's kind of like simple, but at the same time, it just comes with time being in the markets. A lot of this stuff comes with time just being in the markets, watching price react to certain levels, different confluences. Like, it's never just, oh, these highs and these lows. Like, they all make sense. Like, unless I'm targeting like a draw on liquidity, that's different. But like, for my actual liquidity sweeps, what I'm mainly looking for is session highs, data highs, you feel me? Stuff like that. You know what I'm saying? And in this scenario, I'm gonna just show you different examples of each highs and lows that I respectfully feel like they make more sense to get hit rather than the others. Because you got low resistance draws on liquidity, high resistance draws on liquidity. Low resistance draws on liquidity is, like I just said, lows or highs that make more sense to get hit rather than the other ones. And the other ones are what we call high resistance liquidity. Like, I'll show you examples on the charts here in a second, but let's just, you know what I'm saying, like I always do, start with the basics and just, what the fuck is going on, bro? Why can I not move my screen up? Thank you. But like I said, let's just start with the basics and actually draw out liquidity sweeps first. Like I say, liquidity is resting money above highs and below lows. They just make more sense for the market makers to fill their positions to get a bigger return. That's just what we call it. Feel me? Because obviously retail traders, we don't really move the market. The niggas with the real money, like the hedge funds, or these big ass companies, they obviously want a bigger return on their investments. So they look for key levels that could give them more liquidity to be able to fill their bigger positions. So let's say if we got highs right here, we got lows down here, right? Let's say if price is just chilling right here, right? One of two things could happen. We could come down, sweep this low, which would be a breaker structure, right? Depending on where the low is and depending on what time frame you're looking at, right? This is the 5-minute time frame. This would be a 5-minute breaker structure, right? This is the 1 hour time frame. This still be a 1 hour breaker structure. But if you scale down to the lower time frames, it would have been a breaker structure a lot sooner. Feel me? But for the sake of just liquidity sweeps, right? Let's say if price comes down from where we were at up here, right? And we take out this low. Now, most people is going to see this and, like I said, think of a breaker structure, and they think that we're most likely going to shift structure from the upside to the downside, so they'll be looking for sales, right? But the market makers will come down, sweep this low to A, get a better position so they could long, and 2, it stops out most of the other traders to give them more money to fill their positions. Because, like I said, I didn't say this, but in trading, there's always winners and losers, right? When you buy something, there has to be somebody on the opposite side to sell it, right? So what they do is manipulate price to get to a point to where people will want to do the opposite of what they're about to do. That's what we call a liquidity sweep or manipulation, whatever the fuck you want to call it. Everybody has their own terms for every piece of trading. Like, that's why breaker structure, I've heard change of character, change of I'm just like, bro, it's just another word for a breaker structure, right? Manipulation is just another word for liquidity sweeps. It's all the same shit. Like, supply and demand, the same shit as really support and resistance. Like, it's all the same. But like I say, they would like to manipulate price so they can get a better return. And again, that's triggering people to put in sell orders just for them to get stopped out when we go back up to the upside. Right? That's one version of a liquidity sweep. But it could also go the other direction, right? Let's say if price comes up, sweeps this high, and then moves down. It's pretty much the complete opposite of what I just said if we came down and sweep these lows. If we come up and sweep a high, most people are thinking we're just going to continue the uptrend, so let me enter in buys, right? Wait for a little pullback on a lower time frame and then click buy. Again, that's giving the market makers or the big players more liquidity to fill their positions again. Because if we sweep a high, like I said, people are going to think we continue in the uptrend, and we're really not, right? Me personally, when I see this high get swept, I'm waiting for reversal confluences to target the lows to the downside. Vice versa, if I'm waiting for price to sweep this low, now I'm looking reversal confluences to target the highs to the upside, right? Let's do that for the downside. It's pretty much the same thing. If it were in a downtrend, lower lows, lower highs, price comes up, sweeps one of the lower highs, and instead of shift the structure and keep going to the upside, we continue back down to the downside. That's a liquidity sweep. Same thing if price goes down, sweeps a lower low, instead of continuing the downtrend, we shift structure back to the upside. Now we're in an uptrend. Feel me? That's liquidity sweeps drawn out in simple language, right? I feel like I was going to go over something else. Anyways, that's about it for the drawing portion. Alright, cool. So let's get into some real life examples. And off the rip, like, I'm looking at 2, 3 liquidity sweeps. Can you find them before I point it out? Alright, let me delete these other lines so I can get a clear little canvas. Right, so these boxes that I have on here, they are the different sessions of the day, right? So let's just start with New York session and London session, because this was the first liquidity sweep that I noticed off the rip. All right, we got these New York session lows, and this is the perfect example of a sweep. When we're sweeping price action, we're waiting for price to react upon a certain level. The way the candlesticks close are the number one like sign to tell you if we're gonna respect that level or if we're gonna reject it and just keep doing what we was doing. But this low being swept, no candlestick closed below that low. We may have closed right on it, but we didn't get no closure below it. Like even this wick is okay because it came back up and closed above the low. Now, we could get a candlestick closure above or below the lower highs or the higher lows, you feel me? Whatever the case may be. But if you see price instantly reject it and leave a wick trail, that's clear confirmation that we are rejecting that level. So now I'm looking for my entry points, right? And that's exactly what happened. My entry points are inverse fair value gaps, breaker structure, you feel me? SMTs, like all of that good jazz. And I've gone over those confluences in other videos. So just go click on other videos on my channel. Or just comment trading for my Telegram and I can get, you know what I'm saying, get you into that. But, like I said, if price is rejecting that, you see like a wick above the high or below the low, that's, like I said, that's clear confirmation that we are rejecting that level. Price doesn't want to go above it. So, again, like I said, I'm looking for reversal confluences from that point, right? And that's just one example of a liquidity sweep. They're freaking everywhere on every time frame. But like I always tell people, the higher the time frame, the more respected it is. Because it takes longer for obviously for a 1 hour candlestick to form versus a 5-minute candlestick to form, right? That's why people look at the higher time frames for their daily bias, you feel me, overall trend for the day. And then the lower time frames just tell you if we're going to respect that trend or disrespect that trend. Because the lower time frames are going to have the shifter structure first, and then the higher time frames just follow, right? So this is a beautiful example of a liquidity sweep. Price comes down, sweeps a low, it immediately rejects that point. right? We could even have liquidity sweeps as small as this one, right? A high and a low is a draw on liquidity, right? A move up and a move down. That's a draw on liquidity because it's a structure point, right? But again, if it's something like a session low, or like, let's say if the news created a low point, like those lows and highs are a lot more respectable, right? So in this scenario, like let's say if we were trading London session, these lows down here, way down here, are high resistance draws on liquidity. Like if I was actually trading London session, these would be my take profits. But I would be looking for these Asia session highs to get swept, which is basically what happened. I just didn't trade it because it was a Friday and I was asleep. So I didn't really want to trade. I was tired. But that's just what it is, though. Like, these Asia session highs would make more sense in this scenario to get hit or swept rather than us coming all the way down here and sweep these lows. Because, again, we did, but that happened 2.5 hours into the session. At that point, I'm no longer looking for a trade, bro. Especially for London session, because I'm not staying up all night just to potentially not even get a trade. Now, if I was trading New York session and this was the case, that would be different. I would wait, you feel me? Because it's New York session and it's during the day. Feel me? But that is one example of a liquidity sweep, right? It could even be something like this. We got pretty much 1, 2. We got equal highs right here. Aiden session open. Came up, swept it, immediate move down. Feel me? That is a draw on liquidity. That is a liquidity sweep. What you want to see is price immediately rejected or the candlesticks get smaller. Like, let me see. A better example. I don't feel like going to search, to be honest, but fuck it. While I find another example of how you can tell when price is rejected. There's the liquidity sweep there. Right? There's a liquidity sweep here. And notice how most of these sweeps, the only thing that we're getting is wicks above the highs. Or right here, like I said, the wick is below the low. Like, that's a beautiful reaction. That's what you want to see when you're trading liquidity sweeps. This is, bro. Another one. Boom. And that's also the same, like, low that I used for my last trade. Because I haven't traded in, like, technically it's a weekend. So that last trade was on Thursday. It wasn't that long ago. Now that I think about it, I'm sure. Like, this right here is a cool sweep. Like, yeah, we got a full candlestick closure below it, but what happened immediately after that? We shot back up. That's okay. Like, that's still a valid sweep. Like I say, it doesn't matter if we close below the low as long as we get immediate rejection upon that low. Like this right here. These candlesticks going up, we get a pretty big 5-minute candlestick, and then after that, candlesticks just get smaller and smaller. The volume is dying off. Once you see that, that's another clear confirmation that, okay, price is looking like it's going to reject that high or that low. Right? Like, liquidity sweeps are everywhere, gang. It could be as small as something like this. This is an 8 session low. Even though we didn't really get a move up or a move down from it. Still a sweep. We came back up. We immediately rejected that point. Even here, we use these lows. New York session lows. swept, move up. Alright? Like I said, it happens on any time frame. But like the higher the time frame, the more respectable it is. Like I jump up to the 30-minute time frame. I get the same results, whatever. Turn my indicators off. Like boom. Right there. Liquidity sweep. Liquidity sweep is where I actually drawed it out right there. Like liquidity sweep up here. Feel me? And how do you know if something is low resistance draws on liquidity and high resistance draws on liquidity? And that's probably what I'll end the video off on. Like I said, lows and highs that just make more sense to get hit. Like I told y'all with that one trade, or with that one example. If I'm trading London session right here, I'm waiting for A, the session highs to get swept. This is low resistance draws on liquidity. Right? Those A session highs are low resistance draws on liquidity. A session lows and these New York session lows are high resistance draws on liquidity, and most likely will be my take profit points. Right? But like I said, a lot of this stuff just comes with time being in the market. You gotta have experience. Like it just made more sense. Like I don't really know how else to explain it. And the only way that you are going to get to that level is actually having time in the markets. That's why a lot of you don't actually see money in trading. You don't give this shit no time. You think everything is just supposed to click like that, and it's not. This is literally the hardest skill in the world to accomplish. Well, that's why only 1% of niggas actually make it out. But that's just because the 1% didn't quit. And the other 99 did. So it's all a skill issue, bro. Just give it time. Learn how price moves. Just sit down and watch price for a whole day and see what it's reacting on, how it's reacting. You feel me? Because when you're actually in the heat of the moment trying to trade, a lot of emotions come into play, and those emotions are never good. So again, just take your time with this shit, man, and actually wait for your confluences to come. Like, yes, just because we're above a high doesn't mean we have to reject it. Right, we could just be continuing the uptrend or continuing the downtrend, but waiting for those manipulation levels could help out a lot. Like I'm a reversal trader. I wait for highs and lows to get swept, and I'm waiting for the reversal. Like, that's how I trade. That's what liquidity sweeps is. Then I'm looking for my reversal confluences, fair value gaps, S&Gs, breaker structure. Once all of those play into each other, that's a guaranteed winner. Like, I'd close the computer and go to sleep after that point. But again, that's all I got for y'all, bruh. It's 4 o'clock in the morning. I'm finna take my ass to sleep. I just thought I'd do a little video since I'm awake. Feel me? But y'all boys stay motivated. Y'all stay blessed. And I'm gonna catch y'all in the next video.